Very much, Judith, and good evening. Yes, we will be talking and we will listen that the participants understand the progress made in non-financial reports. Judith, can you give us the curriculum vitae of Mrs. Sylvia Meljem? Uh, we can't hear. The audio is off. Sorry, the audio is off. My apologies. Well, next we have Dr. Sylvia Meljem Enriquez de Rivera, who is a public accountant for the Autonomous Technological Institute of Mexico, ITAM. She has a master's degree in business by ITAM, a doctor in science of administration by UNAM. She has an extensive professional experience. She's director of the academic department of accountancy of ITAM. She's been the director of Center of Vinculation and Accounting Research in ITAM, a full-time professor for more than 30 years in ITAM. Her specialty is corporate government and performance measurement. She has many appointments. She's a member of the Executive Committee, International Association for Accounting Education and Research, and also she's representative IMCP, International Accounting Education Standard Boards, among other national, international appointments, and also she had many professional recognition and author of books and articles. With no further ado, I would like to give the floor to Mrs. Sylvia Meljem, and we cordially welcome her. The floor is yours, Doctor. Good afternoon, you all. I don't know if it's a good afternoon for all of you, but it is a pleasure, as always, to be with you in your global meeting. I would like to thank Mauricio Mubarak for inviting me. So I think that this topic has a lot to do with some matters addressed by Stefan in the economic vision, which is the Accord of Paris and also the environmental emergency and the known investments ESG. And I would like to start by saying, we have some poll, and the question number one that could be answered by one of the participants. What's the question? I sent you some questions to put them as a poll. Please give me a sec. We will write them down in the chat. It is in Google. Just give me a sec. This is just to have more interaction based on what or what you read or listen or hear from about this topic. I don't know. I can continue because I don't want to cause a delay. But they have to answer it. Yes, of course. Basically, the first question has to do if you know what ESG stands for. Are you familiarized with the acronym? because I asked this question during a conference thinking that the ESG is well known, and in reality is that in that specific case, 70% of people answered that they weren't familiar with the ESG. So the acronym E stands for environment, S is the social part, and G is the governance part. So this acronym is being utilized as ASG in Spanish. So we're talking about the same thing when we refer to ESG or ASG in Spanish. So this acronym has to do with sustainability that started requested by the UN in a subcommission appointed to the study of the environment and economic development, and a book was published that indicated the importance of doing something because of the deterioration of the environment and the social part and on the natural resources as well. And what is sustainability in this case is the fact of saying that the current generation cannot continue establishing companies, even though profitable, they compromise the capacity of future generations. What is a compromise? The world is deteriorating on the environment, where inequality increases, and the need of many people living in extreme poverty, and this has caused all the migration processes of populations where they can no longer find what they need where they live, and they migrate somewhere else, causing important problems in terms of health and economic. Well, in Mexico, we are experiencing a crisis due to people that migrated. I want to go to the U.S. Well, in this way, in 2004, where the Secretary General of the United Nations coined the term ESG and started making reference to address the three factors about sustainability of the company, and the company having concerns about the impact on different groups of interest. That's why this is related to the topic I will deliver today. I relate sustainability with the evolution of the corporate reports, as we all know, and I mentioned this in a company that I delivered some time ago. So the most important, or the star product, is the financial statements. Está prendido un audio, no se puede escuchar. Well, they have lost the market share, and the most important reason that they lost market share is because the users of information are not satisfied with the information, and the lack of satisfaction is due that at the end, the rules, the way that the accounting technique recognizes the value of assets in a company is merely transactional. So today, the value of companies can be transactional, and here we see in this slide how, according to the definition under our financial information standards, there's in the intangible, and we can quantify the transactional part where we can demonstrate the future value, but there's a large part that cannot be reflected that has to do with human capital or organizational capital. If we relate this to sustainability, much of the impact is on the natural resources, environment, and social part, and this would fall in intangibles, and this will be difficult to quantify. Now we have question number 2 that refers to, I don't know if you can see it. I think it is available to be answered. So how do you think that a company could be or not reflecting in the financial statements because of the value generated in intangible assets? So when we normally ask this question to an audience, there's someone that answered 30, 40, or 50, but in reality, in many industries, especially in the industries that we see that emerge during the pandemic based on technological platform, and and the value has to do with building networks. The investment made in technology is one thing, but the capability that this platform will connect between supply and demand, we really see the value it has. Uber, for example, it will have an impressive value during the peak where it was able to connect supply and demand. Probably if we assess this based on the pandemic and important competitors, the value of Uber has considerably dropped. So this value is a value that has a lot of volatility and therefore is very difficult, and we know that recognition rules in the financial statement do not allow us to include volatile things that will not be materialized in the future. What our IFRS, the objectives of the financial statement, and there is a point where this is part of what a company needs to do in disclosure, is to disclose the financial statements and notes and disclose supplementary information that normally has to do with the analysis of the managerial area, but the information beyond the financial statements, this is it's not supposed to be disclosed by the company. We find this in the sector statistics, in social programs, or in this kind of publication. This is what we have in our financial information standards. But this triggers a need probably that is not foreseen in this NIS. So even though the evolution it had, the FASB, now the foundation of IRS with the issuing of the international standard, since 2010 we have the SASB. And curiously enough, the founder of the FASB was the chairman of the IFRS, and he was responsible of giving the information, and because of the limitation of the financial information, it was not possible to disclose it. So in 2010, the SASB was created, and other initiatives that I will mention in a while to issue information aimed at the sustainability part, or as I said, an ESG.
If we added up to other non-accounting initiatives but sustainable, I hope that you can still read in this slide that growth becomes exponential. And we can see the years here. 2012, Paris Agreement first, and then some other efforts, but before the Kyoto Agreement, and some other efforts by the United Nations, and also some international standards concept initiatives and the principles of Equator, and also the stock exchange principles, green bonuses, and some concepts referenced to whether and most of them refers to Paris Agreement and some other from the United Nations related to sustainable development. There's an important growth of other initiatives that I will explain in detail now. On one hand, we have the need to have models that are sustainable, not only profitable, but sustainable. On the other hand, we see the constraints of financial information not to be able to reflect a lot of this information, and then a paradigm shift. Traditionally, our corporate governance used to be to comply with shareholders, and the top decision body would be the stockholder assembly, and at top management there were many failures in this system, and there was a big concern for that interest conflict and the lack of disclosure with third interested parties or interest groups. There was another question related to the fact that companies should focus or how they can manage to be sustainable in addition of being profitable. This is a shift of paradigm which is necessary, and how we can materialize it. Logically, this is related to business purpose, which is the true purpose of businesses. In this slide, what we can see is that even when this is not getting back to the stakeholder paradigm, it does change the sense of this sense, because the sole interest of companies was to generate value for companies, but nowadays this is not the one. But knowing that a company cannot attain or achieve a strategy of benefiting stakeholders, damaging the environment, value should be created for all interested parties, but also the society as a group. And then in 2019, all this is very recent, of course, these changes making a goal declaration or statement which is signed by several countries, and they commit to change the purpose of their business, and this purpose should be centered in benefiting all interested parties. So this is the shareholding having as a core point the benefit of the shareholder changes, and now we need to focus in all interest groups. And as this was previously mentioned by Porter and Kramer, for the company to become productive, there should be some competitive advantages, but these competitive advantages could also exist, creating value with interest groups. At the end, a company is not a closed being, but taking parts of the environment and getting back to them. So then they can generate competitive advantages by creating a shared value. We can have these two business models, which sometimes are not so similar to what we have called corporate social responsibility. A lot of companies used to have this award of being socially responsible, but it is not the same corporate social responsible to be creating value as a group or as an entity. Because one thing is to create good things, and then another important point is to measure economic benefits, and moreover that these benefits are greater than costs. We cannot think about models for companies creating these benefits which are not profitable. And this is different from philanthropy because you are creating a joint value. This model has connections with interest groups and it becomes part of the competition. And of course, the agenda is internally generated and there's a purpose realignment for the company, always looking to generate the biggest shared value in the business environment. This is also related to something that I already mentioned. This was the proposal of integrated reports. These integrated reports are connected to sustainability and they are renamed value creating reports, trying to define how the company, by changing strategy and purpose, changes the way of being ruled, creating shared value benefits, and perfectly can be aligned or can be shown as financial reports that are integrated with non-financial values and how they contribute. And this is the model that we already know, which is the integrated report. There are 6 capital spheres which are used by the business to carry out activities, and of course after being transformed by company groups, they can impact these 6 groups. An example is circular economy, which is also known as a first plane activity. It is a company that designs products, processes, thinking from the beginning how to recycle, how to treat waste. So at all times in the design of its processes, the idea of sustainability is envisioned. We were talking about this integrated report, which is related to organizations, its governance, risks, how resources are assigned. And the important part of these integrated reports is how we measure them, how we measure their performance. And this is also linked to the balance map, because this map is targeted to make clear how to align strategy with operation. In most of the situations, we see that the strategy is there, but it's difficult to know whether this strategy is becoming operational or not. And in this operating part, we have the measurement. In these initiatives, what we actually need is to measure. And with these maps, we can generate goals. And these goals have metrics, concrete metrics. And these metrics are the ones that we can use to incorporate them in our financial reports. And the important thing, which is also a good premise, is that any kind of assets, either tangible or intangible, should be realized on the long and short term to cash. At the end, all the company cash should be materialized in this manner. Now let's turn to a different stage. What I mentioned was background, and now let's measure ecosystems. The question was here. It was present in some of the models, concept, framework. And what I wanted to know is whether they were familiarized with any of them. So in general, we have standard frameworks, the same as we see the timeline. They have been evolving along with sustainability initiatives and also sustainable finance initiatives that have been led by the financial sector. In this sense, we can see that the group of the oldest standards is the RS, then CDSB, then all the integrated reporting. The European Commission has its own standards that have worked very well in this zone. And then we have the one of the United Nations, TCFD, with a very important initiative related to weather. And then we have SASB. And finally, we can see, and this is also important for the accounting profession, taking this point as something relevant, was that back in 2021, the IFRS Foundation proposes to be the issuer of these non-financial forms. If I am issuing financial information standards and I am experienced in making them be adapted all over the world with this experience of all these players, I'm going to take the best of each one of them, and then I can collaborate with them to make a proposal regarding non-financial information. There's a whole ecosystem developed for this. Probably you are not able to see this so full slide, but if you have the presentation and you can make a zoom, you can see that there are many players, those developing the framework, the standards, the assurers group as well, what we call insurance service. It's okay, I'm going to make my reports, but some of them are not being audited, and some of them say this is not an audit. Who's going to make sure that information in these reports it's true, it's reliable for decision makers? There's an important group in market suppliers, an important group in index, and of course a part of bank and some analysts. And we also have analysts that would be users for this information. Of course, the best known for us was what I was mentioning, and this was the social investment spectrum, known as philanthropy. And at the core, we can see that social investment was treated as independent from financial investment. The conventional part of financial statements was incipient, limited to integrate those metrics and the methodologies, BSG, and not to have separated reports. On one part, the social, and another part, the financial. And there's a big part in the financial system because nowadays, as Stefan mentioned, there are many investors saying this company is not showing that they are investing in BSG issues, so I'm not going to invest. And then green bonuses or initiatives, and not only green but also social and governance. Those are the ones that have had the highest profitability during the pandemic. These bonuses are the ones that are most profitable during the pandemic. As we know, financial statements where we have issuers of the information, there's an intermediate chain. An important part of this intermediate chain is that accounting participates in a lot of the stages in this intermediary part. We cannot let others to take our part. As the foundation says, I'm going to be the issuer and I have the experience. I think that the accounting profession also has the experience. It is known to carry out many of these activities. So we need to take this as a priority, and knowing that we can have high value activities in this line, and also index suppliers. They have not even agreed among them because many of them consider 186 indicators by Thomson Reuters, MSCI 34, and Bloomberg some others. So they have not agreed how to reflect it. And as we can see for 2020, many of these reports were presenting some reference related to these 17 United Nations development goals, probably because they are the most important, but not all of them have been so important or reference in companies' reports. There are some of them that are more important than others. Report frameworks, which are the most used due to their seniority and penetration. The top is gray, then the integrated report, then the SASB, and then CDP, TCFD, CDSB. But I think that this is going to change in the future because among themselves they have decided so. What's the reason for which all these frameworks are deciding to get integrated? As we can see here, because it starts to be mandatory in many markets, and this is going to generate a better image, and also companies are interested in having a decision of the necessary frameworks, and of course because it improves profitability on the long run. In 2014 there was a dialogue for the first time with these players. 8 organizations agreed. The most common, as I mentioned, you can see the GRI, the NCDP, FASB, and importantly, we can see new players that have been regulators in financial areas. In the past, they used to be non-financial information. So here you can see how these financial regulators are being united. And we can see FASB and also ISO standards. They say that they can play, that all of us have a place here, and we are not going to see all this development of these frameworks and standards. We don't want to get back. We just need to learn how to share them. So they design precisely when they want to agree this chart that we are seeing, where they say, if this is all about financial statements, this is the classical report where we have the FASB. But if we want to provide information to generate value in these values that go beyond traditional values, we need to take into account the integrated values, SASB, and what CSB says. If we want to go farther and not only understanding value creation to interest groups, but also this targeted to society, we need to get back to Greece. And if we see this as a general manner, the wider sustainability reports are the ones of Greece, then SASB, and now getting to the concrete part of financial statements, to the FASB. For 2015, this was an important change. It was said that all sustainability was important, but there was an environmental emergency as mentioned by Stefan. The priority then is to see which is the impact of companies with climate change. And I think that this one is specific for disclosure with these weather areas. And there is a materiality framework which is going to be really important because we will always see if it is material or not. And if it is disclosed. When we talk about materiality, we need to define what we mean by that. On one hand, we're assessing the risks and opportunities in the area of climate change. Even when there are important risks, there are also important opportunities. So when we say, how have you done with the pandemic? Well, it depends where you are playing. If you are at a medical industry, laboratories, technological, logistics, probably you are doing great. But if you are in a traditional segment where technological resources are not your main platform, probably you are not doing well. So we need to define risks, opportunity, how they affect in planning. And here we have the important part, how at financial level I can acknowledge this in my P&L and flow statements. We're talking about specific impact in the recommendation structure of FASB. This is related to governance, strategies, government, and metrics and goals. Well, I don't have the questions, but question number 5, I can't recall what it meant. I think it was materiality. I don't know if you have heard about the double materiality. This complies with that. And what would it be? A double materiality. One of them measuring impact of climate change on the company, the effects of climate change in the company regarding associated features, and we need to measure this backwards. So today, it is said, traditionally the company has seen how the environment affects, but now we need a double materiality. I need to know how it affects me, but also interest groups need to know how the company is affecting them. So this is called double materiality. And here there's a whole consideration on the frameworks and standards that could be applicable for this sense. And as you can see here, again, we have the most general frames, which is the gray one, two more specific frames or frameworks as the HASB, and finally the financial part, which is the financial statements. And after this, we have a proposal that changes conditions, because as we had 8 organizations, there was a merge in SASB and integrated report. This merge provides a lot of integration. The integrated report was widely used in Europe and South America. SASB was mainly used in US and Canada. Then when you merge in the Value Reporting Foundation, they became leaders in ELG. And we are seeing here what are the recommendations regarding frameworks and standards. Then they position themselves as leaders for the future. And they, if you get to their websites, they are recommending us to study 3 things. Integrated thought principles, how to see the organization in a comprehensive manner, plus integrated report, as I said a few minutes ago. And finally, the standards of SASB. If you don't know them, please get to know them. They are truly specific standards developed by the industry. They already made an important activity regarding these indicators. As you can see, indexes really count for a particular industry. Many important things are in place. So these standards consider standards by industry. And yes, they made structures to be able to use the integrated report as a concept framework and SASB standards as GFT standards specific for each industry. The SASB model acknowledged that there is a concept universe where they know whether they can see in a different manner their social capital, their business model, also related to innovation, and also innovation, as I said, and the environmental part. Then they somehow manage to streamline the integrated framework with the concept of sustainability and SASB or FDA concepts. Double materiality again. And yes, financial materiality is present from the environment to the company. And one of the parts also impacts the environment. Therefore, the part referring to value creation and investors is on financial materiality, but also there are things that are important for other groups which are related to the environmental and social part. There is a map here. This is an industry map. It is not very visible, but if you go to the SASB website and you want to know which are indicators per industry, there you will see the menu and you can deploy all the indicators, and here you can see that they are highlighted, those that are the most important for the industry. With this link for the presentation is where we can get in and see financial materiality maps for different industries. Of course, this new focus of the Value Reporting Foundation can be combined with that focus that was agreed by these 8 organizations. Even they consider this. There are many things, but in concrete, there are 3 important framework. The integrated, the one for climate, and also CBSB for weather, and the one which is CSB general, not only for weather, but also environmental. Then we have specific standards like SASB. Some other references. Due to time constraints, I'm going to skip that. Which are the advances in Mexico? So we can focus on how much we have advanced. First, Mexico is a country which is considered a country that issues a high number of gases, greenhouse gases, and has an important number of contingencies, also pollution, social inequality, people living in high-risk conditions, and of course we should care a lot to get into energy measurement. Our stock markets observe principles and sustainability principles, both the Mexican Stock Exchange that has the sustainability process of a company competing like Viva, as you can say here.
Those are very recent things. In 2020, Viva announced that it will present a sustainability index, so both stock exchanges are committed that the companies that are listed in security markets should abide by this, and also the green finances, where we studied what kind of information should be disclosed. So in this sense, it was highlighted that the recommendation, or at least so far, it is that in Mexico the SASB standards must be used, and also the climate task force on climate-related financial disclosures. The SASB merged with the integrated report, and this would imply for the companies in Mexico to abide by what it is stated in the integrated report, the use of SASB, and additionally use the TCSB. So in terms of reporting, it will be reported in the same way like financial information is reported, considering they have the same relevance, and also the information should be integrated according to the integrated report framework. It should be in the pages of the companies, web page of the company, but should also be sent to the stock market exchange, and with the processes of preparation, supervision, and auditing. This is what I was referring to. This kind of reports must have that to be objective, reliable, complying with all the quality criteria. The similar processes should follow this when it comes to financial information. The Sustainable Finance Committee in the 18th of November 2020 formed 4 task groups. One has to do with taxonomy, the other one with the use of opportunities for capital mobilization for ESG projects, also in Bank of Mexico to measure risks, and also the other one, which is the National Bank and Securities Commission, in terms of the disclosure of financial statements. Well, in conclusion, we have had different ways of reporting and to measure the economic performance of companies. Obviously, what we have traditionally known, those are like the financial statement. And this isolated reports on the financial part and the social and environmental part cannot continue being isolated. They should be integrated, and there's a lot of information, but if we define the materiality and we recognize that there's financial materiality, and also for the investors and the creation of value, and there's materiality for the stakeholders, so we can limit or delimit which information will be disclosed for one group and the rest of the audiences. So in the years 2000 and beyond, this can accelerate a lot. We see the governments of all the countries, especially the regulators of markets, making mandatory some of these frameworks. Which is at the forefront, the one that I mentioned before. So the last question was referred if you believe that these reports will be audited, and if this is going to be mandatory, and obviously I end my presentation.